Hey guys, it's Tim. Glad to see my current viewers haven't lost interest yet, but to those of you who are new, welcome. My game is trading in the futures market. And today, as was promised not too long ago, is the beginning of what's yet to come. Now I'm talking about time frames, importance of zones, market analysis, and much, much more. Now, without further ado, let's get this thing started. So pretty much what we're looking at right here is the ES, which is a financial instrument traded in the futures market. Now, if you don't know what the ES is, basically that's the E-mini of the S&P 500. And the S&P 500, if you know stocks, is an index comprised of the top 500 companies traded publicly in the United States. So the ES, which is traded in the futures market, is pretty much that same index. However, it's being that it trades in the futures market, you buy and sell contracts of it versus shares, which you do in the stock market. And in my opinion, gives you a much more higher ROI, a much higher return of investment versus if you was to trade it in the stock market. Why? Because this market is extremely volatile and moves very quickly, because that's what futures does, it moves very quickly. Now, even though both instruments, both charts are for the same financial instrument, the ES, they look very differently. Why? Because of something I'm about to explain called time frames. So pretty much if you look to the left chart, you see a time frame for the weekly. If you go to the right chart, you see one of the 15-minute. So pretty much what that means is each candlestick represents price action for that given time. So for the weekly, every candlestick represents price action per that week, versus the 15-minute chart gives you price action per every 15 minutes. Now, other things that we're looking at over here would be the line right here you see at the bottom, which is my ATR. Now, as you see, my screen is pretty naked. You don't see too many indicators or oscillators. You don't use any of that. And even the ATR, which is down here at the bottom, doesn't really give me an idea for price direction. More like it gives me an idea of liquidity at the moment. All right. So the ATR, the average true range, gives me an idea of what the next candlestick is going to give me, how much money it's going to be giving me. Why? As you see, per how you edit it, right here, mine is saying 14. It gives me an average based off the previous 14 candlesticks, what the next price is at, what the next candlestick, how much money it's going to be giving me. So right here, you see mine is given $4.95 on the right screen. That's telling me every candlestick most likely is going to give me $4.95. But the ES doesn't move in increments of points or dollars. It moves in increments of ticks. Every tick is worth 25 cents, it's worth a quarter. You know, simple math, there's 4 quarters in a dollar. So if I want to know how much ticks I'm getting per candlestick, you got to do simple math. If it says 4.96, let's round that up to 5. That 5, multiply that by 4. Boom, that's telling me every candlestick is giving me roughly 20 ticks per candle. And that's very important because that's telling me how much I should be expecting to make per trade depending on how long I'm staying in the market. But once again, it doesn't give me any idea of direction. It's just giving me an idea of how much volume is in the market at the moment, how much liquidity. So in terms of how I get in my intraday trades, we would want to take a look at over here what's happening on the weekly time frame, the weekly chart. Why? Because before I get into any intraday trading position, I want to see what's happening on the higher time frame, what's happening on the higher time frame chart. Why? Because the high time frame, which shows price action over the broader period of time, holds more sustenance than what's happening currently, what's happening in the 15 or the 30-minute. Now, that's very important. Why? Because it helps keep me out of areas where reversals might happen, price might go against me, consolidation, and more importantly, market noise. If I'm putting my areas of support or resistance based off the higher time frame, I'm getting in off of principal key areas of heavy buying and selling pressure. And that's where I want to get in so that I have the highest probability of successful trades. So if you want to give a quick analysis of what's happening previously, I had my area of resistance right here, which I applied to. If you do this, you can see I applied it to all my charts, but based off the weekly. I put it right here at the top of this candle at the close at at 34.94.75, right? That was my area of resistance. Now, the reason why I put my line over here and not all the way up here where you see the highest point is because this here is called the wick. This is not where prices closed. This is where prices were met, but prices ascended or descended after that point. So right here where you see the body, where it's red or where it's green, that's telling me where prices opened or closed. Me personally, I like to leave my support and resistance line based off the open or close because I feel like they just hold more sustenance. But that's just my personal trading strategy. But getting back to the chart, I have my line right over here. So what that's telling me from the week of August 28th, prices closed at that area. And after that, you saw none but selling pressure in the market, right? Now, I'm not sure what the market's going to do next. All I know is prices came at this point and after that descended. So I put that line there to give me an indication of area of importance depending on what happens next in the market. So then what happened previously in the week of the 16th? Prices came to that area, but then closed many prices below that area of resistance. So now that's telling me as an intraday trader, I'm not going to get in right here where the price happened to end at the end of the week previously, but because price ended below this area of resistance, I'm looking for shorting opportunities. And I'm gonna try to get my shorting opportunity as close to the line as possible because the closer you are to your zone, the safer trade you're taking and the much higher return on investment you're probably gonna get on that trade, okay? So what's the area of importance right now? It's 34, I'll do this exactly. It's 34.94.75. So I know Monday morning stock market opens up, even though futures open up on Sunday. Stock market opens up on Monday. I'm gonna get up and I'm gonna be looking at my chart on the 15-minute, right? I'm gonna blow this up so I have a better idea, much clearer idea. And what do I see here? This is the 19th, which is today. What do I see here? What happened around 3 o'clock in the morning? Price passed that point momentarily, but then right after closed below that area of resistance. Now, me seeing that on the 15-minute chart, that's telling me, okay, I could definitely go short for an intraday trade, but I want to go short the next time that price touches that area. Why? Because I want to get the best price. It's just like somebody going shopping, they're looking for the best discount. I'm doing the same thing when I'm trading. I want to look for the very best price before I get into the market. So I want to get in right when price touches that over there, and I will probably get out a little bit above this area right here, above the close of the strongest bull candle. So that would have meant I would probably had my stop about 2.25 points above my entry, but that wouldn't have mattered. Why? Because you see the highest that price went was about, let me see, from here, 94.75, the highest 95, 96, a few ticks, $1.25 maximum. But as we saw after that, after the entry, nothing but selling opportunity. You see that the market just kept on descending and descending, a lot of selling pressure. Why? I'm guessing because of price action that happened based off the weekly chart, okay? So if I'm going to summarize everything that's going on here, the way that I look for my intraday positions is I look at what's happening on the high time frame. I identify my areas of support and resistance based off of that because it holds more sustenance. And then I go to the 15-minute chart or sometimes the 30 and look for areas where I can get in currently, short term. But regardless, always want to refer to that high time frame. Why? Because it holds more sustenance. Now, to all my traders out there who like what they saw, hit that like button, please. We really appreciate it. For any comments or concerns, you could go in the comment section or you can hit my line. My DMs are always open. And I'll be back with more to share very soon, next week time, with more market material.